good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Sajid Sharma. And for now, the market is looking like it's taking a holiday already. 21,800 level is what we saw yesterday. We opened in the red, but from there has been a bit of a slip in the market. We're now trading below 21,700. One would have expected that there could be some NAV adjustments and perhaps the last day of the year, the bulls will try to make a fight. But looks like for now, they have checked out for the holiday already, and we are below the mark of 21,700. But it's not about today really, it's about the year gone by, and the year gone by has suggested that Nifty was up almost 8 to 9%, one of the best performing indices, and more importantly, this is the 8th year on the trot that Nifty has actually managed to give gains, and this is the longest ever gain streak that we have seen. Not saying anything about 2024, but definitely 2023 has managed to gain further. This year, of course, year of record highs. We have seen Nifty Realty registering the best single yearly gain in 6 years. Autos was up around 45%. Again, the best single yearly gain that we have seen in 9 years. Today, specifically, it's about Tata Group of companies. We saw that big message being taken out by N. Chandra talking about how they're likely to take up, technology in the coming year. Consumer and brand recognition is one thing they're very serious about. As a result, you have Tata Motors, which has hit a record high, past the level of 800 bucks, surging with a gain of almost 4%. And then Tata Consumers too has managed to hit the market cap of 1 lakh crore rupees. It's the record high level there. And then, of course, there are individual pockets like telecom, where Vodafone is higher, Indus Tower is higher, order win reactions coming in on Kalpataru Power as well as Power Mech. But those are individual stories. Ajay, I think the story for today is Tata, Motors, the kind of surge we are seeing on Tata Consumers, and of course the other large cap companies.
Well, that's correct. I mean, 2023 actually was a good year for the Tata Group. If I would say that out of all the big groups in our country in the listed space, it's the Tata Group. Tata Tech got listed, and you saw Tata Power. Look at that stock, particular stock also crossed the 1 lakh crore mark. Now Tata Consumers also, and there is hope and promise in Tata Tech and Tata Elxsi as well. TCS, of course, is doing its own thing. So this group has been a wealth creator. After having a great 2023, Tata Motors getting into a new gear altogether, crossing the 800 mark. So this is you have to watch out for this particular group. But overall, if you talk about markets today, you are maintaining bulk of the gain which you have made in last hour trade. If we are not giving up a lot of gain, I would take that also as a positive. Look at how India VIX has actually cracked in the last hour, almost a 4-5%. Can you pull up the India VIX yesterday too on expiry? We saw a big crack coming in, another 5% coming in over there. And mid cap, small cap are not quiet. It's the bank Nifty may be hugging the flat line, but mid cap and small cap, a lot of action happening in several names. In fact, trading very healthy. Everybody is calling a top in mid cap, small cap, but these guys are just, laughing at them. So we'll talk about a lot of these stocks and action from here on. Nuresh and Kunar are also here, but right now we'll go to Ashesha with a wrap of 2023 in the action in the market, and then we'll take some leaves out of that and discuss market. Ashesha?
Well, yes, last trading day of 2023, so we decided to take a look at how Indian markets have performed as compared to the rest of the world, and also as compared to some asset classes. So in dollar terms, Nifty 50 has given returns of nearly 20% this year and has outperformed several emerging markets. Hong Kong market, Hang Seng Index, in fact, has given negative returns of 16% this year. Nasdaq, meanwhile, has given a solid 44% return in 2023. Let's also talk about a couple of other asset classes. First up, cryptocurrencies. Bitcoin has had a dream run this year. They rose by about 162% in the calendar year 2023. Gold, meanwhile, also hit record high this year with a surge of nearly 14%. Brent crude prices have rather been volatile, and Brent crude prices have declined by as much as 7% this year on a year-to-date basis. Let's also talk about a couple of other commodities then. Natural gas prices have declined by as much as 56% this year, while industrial metals have rather shown a mixed picture. Nickel prices have declined by 44% in calendar year 2023, but iron ore prices have surged as much as 21%. Talking about a couple of other commodities, coffee prices have risen 18%, while sugar prices have been rather muted with a surge of nearly 3%. Let's also compare how Indian markets have performed as compared to some other global and emerging markets. Nifty has given a return of nearly 20% and has significantly outperformed emerging markets the likes of China and Hong Kong. Meanwhile, we have Nasdaq, Nikkei and DAX which have given over 20% returns this year, and hence India has underperformed as compared to these markets. Meanwhile, let's also talk about India, where Indian inflows stood at about $20,100 million this year, and it is much more than several other emerging markets, the likes of South Korea, which saw inflows of about $9,800 million, and Taiwan markets, which saw inflows of about $5,800 million. This shows the kind of resilience Indian markets have shown as compared to the rest of the world, and several asset classes also the kind of outperformance we have seen.
Interesting analysis. Thanks so much for putting that into perspective for us, Asesha. But we do have our guest on the show, Anshul Sehgal of SehgalCapital.com. We have Naresh Mirani as well as Kunal Bothra in the house. Kunal, let me start with you. Can't complain about the year gone by at all. But 2024, if you had to pencil in a target for Nifty, mid cap, small cap, give us your rough estimates as to where you see the markets headed.
So yeah, of course, no reason to complain. It's been a fantastic year, and the last couple of months have just been cherry on the top for the markets and of course for individual portfolios. Now, in terms of the specific targets, I think for the next 4 or 5 months, I've highlighted that I would probably be looking at least another 15% upside for the benchmark indices, even from current levels, which means closer to 25,000 odd is where I would probably expect the Nifty to head towards, and for the Bank Nifty that could be somewhere close to 57,000. But one of the points which I think Ajay was mentioning about the India VIX, and I think it's a very important point, because just as an highlight in terms of one of the data points, at a 350-400 point down for the Bank Nifty, the at the money put option yesterday, which was at 300 rupees, is just 370, 375. So even after a 400 point jump, because of the significant drop in India VIX, the puts have risen by just 75 to 80 odd points only, and that is one of the concerns. So even if someone who was probably holding up put options yesterday and probably been holding on long positions on the stock specific, he would be losing money today.
Interesting. Let's get in Anshul Sehgal also on the show. Anshul, good day to have you. The last trading day of the year. Before I ask you about market, what are your New Year party plans now that you are a free bird? And back in Delhi or still in Mumbai?
Hi Ajay bhai, pleasure to be speaking with you. I am in Mumbai very much. I was in Delhi till yesterday, came into Mumbai. New Year's is going to be with family, friends, and as it is usually, this is not a day to be out on the road, so we generally stay indoors with family and friends. Meeting some friends on New Year's, that's the plan. I wish you a very happy New Year, as also Anisha, and I hope that your plans are as rocking as you are.
You can say that, but we'll talk about it offline. But yeah, I mean, that's a contra call to stay at home, house party with friends and family, have a good time, take stock of the year gone by and plan for the new year. But, this year gone by has also kind of spoilt Indian investor and traders out of the hefty gains. Going into 2024, would you be slightly more moderate in your return expectations? Because the easy money perhaps got made, no matter how superior the earnings growth may be, quality of GDP growth in India, but it is also a lot of money chasing, say, 100, 200 high quality stocks. So there is a risk on that side. Would you?
I couldn't agree with you more, Ajay. See, one thing that is a reality in the markets is that in the long term, you will always have markets in line with earnings growth. And because markets are non-linear, what you have in periods is that earnings either outstrip markets or they understrip markets. Last year was one such year where earnings understripped markets. So markets, say for the small and mid cap names, markets were up somewhere in the region of 35 to 40%. I don't think earnings grew by that much. Earnings would have grown in the range of say 20 odd percent. Now, what that means is that markets have outstripped earnings for that 1 year. In a sense, markets have taken from future earnings. And as a result, in the future, we will have to moderate our expectations of market performance. And it is only when earnings catch up with markets that you can be comfortable that markets will revert to the kind of growth that we have seen in recent times. I think that it is for this reason as well that large caps look much more moderate in terms of valuations as compared to the small and mid cap space. And that is where a prudent investor should be looking to invest in the current year and in current times.
Taken, but let me talk about today specifically and highlight some of the stocks and news for our viewers. First up, from the sugar sector, there was a bit of fillip that we got on an intraday basis. This was an 18-hour news break, which is now actually confirmed. It's almost 7 rupees per litre incentive on ethanol, which has been derived from C-heavy molasses, which has been announced by the OMCs. This is for the supply year FY 23-24, and this will take the total ethanol from C-heavy molasses incentive to be at 56.28 rupees per litre. We should perhaps pull up some of those graphics that we have created on the same. You also have the OMC reaction coming in on the negative side, and that is because we understand from sources that price cut is possible in the range of 8 to 10 rupees per litre. That's the reason all those gains which were there yesterday on HPCL, BPCL, IOCL are getting retraced, and all of those stocks are in the red. Having said that, GAIL is one stock which is standing out. Motilal Oswal had come out with a note calling it one of the top bets for 2024. Re-rating hopes are driven by the ROE improvement there, so definitely positive. And then Venus Pipes, wherein DAM Capital has actually initiated coverage with a buy. The target stands at around 1810 rupees. Naresh, let me come to you for some of these names: oil marketing companies, GAIL, Venus Pipes. Any chart that looks interesting to you?
So I would go with the oil marketing companies on this dip as such. We saw a strong breakout in a lot of these names, and any retest of those breakouts should be a buying opportunity. So closer to 390 to 370 is a band where you want to be into Hindustan Petrochemicals. Then you have BPCL, where closer to 440 odd levels is your entry point. So overall, oil and gas looks like a multi-year breakout, and the trend should sustain going forward. GAIL again, which was a favorite before, the stock has already moved up quite a bit from those 110, 130 levels. But again, any dips to 150, 55 remains a buy on that one.
Point taken. So that's the view on the oil marketing companies as well as GAIL. Let's do one thing. Let's quickly step into a very short break. When we come back, we discuss individual names which are buzzing around.
All right, Soumit is also joining us now on the show to discuss about Outlook 2024. What are the key brokerage notes saying about the time to come?
Well, just before the 2024 outlook, let's have a look at what brokerages were expecting Indian markets to do in the calendar year 2023 and how they have actually performed. If you see, the brokerages had a target anywhere between 18,000 to 21,400, and Indian markets on an average have beaten the brokerage expectations for the calendar year 2023 by around 10% odd. Now for 2024, if you see, Citi has a target of around 22,500. Apart from along with this, Nomura has a target of around 23,200, and this is for December 2024 target for Nifty. Morgan Stanley has a Sensex target of around 74,000, and for ICICI Securities, if you see, they have a target of close to 23,200. Goldman Sachs has a target of around 21,800, and for Morgan Stanley, when it comes, it's 74,000. That is the base case Sensex target. The bull case Sensex target is 86,000, while the bear case Sensex target is around 51,000. When it comes to stock and sector specific call, Citi is overweight when it comes to PSU. They're also overweight on defense stocks, industrials, banks and insurance, and they're underweight on consumer discretionary, IT and metal. Now HSBC has given some top stocks which are also a part of their portfolio, and HDFC Bank, ICICI Bank, Asian Paints, Cipla, Maruti Suzuki, Infosys and BPCL are a part of that. When it comes to Nomura, some stocks that are part of their portfolio, it's Reliance Industries, ICICI Bank, Godrej Consumer, Axis Bank, M&M, L&T, Uno Minda and Fortis Healthcare. When it comes to ICICI Securities, they are overweight on some large caps like L&T, Indigo, Bharti Airtel, HDFC Bank, Coal India, IndusInd Bank and SBI and also M&M. Along with this, Morgan Stanley is keeping stocks like Nykaa, Reliance Industries, Maruti, Hindustan Aeronautics, SBI Life, L&T, Infosys and Ultratech on their radar. So keep an eye out for these sectors and stocks which big foreign brokerages are keeping in their portfolio and on their radar.
Somit, for talking about what the year in store could have, at least what the brokerages are expecting. One of the top targets at 22,500 and rest closer to 21,800. So, but shouldn't give too much credence in the sense as to what happened in 2003, because they started with very tempered expectations, but the year panning out was very, very different. Anshul, I want your take on the auto stocks, but before that, let me actually bring on board Shrishti to tell us what the expectations are from the December sales figure, and then we'll take Anshul's view on the same as well. But Shrishti, tell us, how was the month gone by? Because I'm guessing on a month-on-month basis, there would be a decline because of the festive impact.
So the December month is expected to be a slow month for all these auto OEMs. Why so? Because from 16th of December, the Karmas period has actually started and it goes on to 15th of January. So in the Hindu religion, the buying is not preferred actually, and there are other factors at play wherein, because it's the year end, from a couple of days now, we will be kickstarting the fresh new year. So the companies actually try to get rid of their older inventories. Production is actually on the lower side. The discounts have increased so that their older inventories get off the channel. So all these factors will be at play for the month of December. But other than that, if we talk about the segmental performance, then yet again the two-wheelers are expected to shine bright in this particular month. So the discounts are actually low on a YY basis because post the festivity as well, the demand continues to be quite robust for all these companies is what we are gathering. Other than that, from the passenger vehicle sales, the demand is expected to be a bit moderated because it's quite a trend that we are seeing for the past couple of months now, and yet again a bit of a moderation is expected. From the commercial vehicle space, we will see a bit of a pickup on a sequential basis, that's on a month-on-month basis. But the key to note is that though MHCV sales could be quite steady, but it's the bus segment that is seen to be doing well. Companies like Ashok Leyland, Tata Motors, they have all announced that they have got fresh orders in the bus segment. And lastly, from the tractor division, because of the monsoon deficit, we are expecting a double-digit decline in the sales on a sequential basis. So the strongest among these segments could be the two-wheeler, but the weakest link could be the tractor sales this time around. Let's move forward and shift focus to the company-specific performance. So from the passenger vehicle space, we are expecting a bit of a single-digit decline for the likes of M&M Auto as well as Tata Motors. But for Maruti Suzuki, it could actually be a double-digit decline where we are expecting a 18% decline on a month-on-month basis. Why so? Because the company's sales and the plant shutdown was also planned, and the companies has been increasing the discounts to get rid of their inventory. Other than that, from the commercial vehicle segment, like we highlighted, that on a month-on-month basis, there could be an uptick. For Eicher Motors VECV, there could be a sales jump of 26%. For a Tata Motors commercial vehicle, it could be a flattish kind of a growth. Sales number expected to be close to 29,000 of units. But lastly, from Ashok Leyland, there could be a jump of 14% on a month-on-month basis. From the two-wheeler segment, all eyes will be on this, because for Hero MotoCorp, we are expecting a bit of a moderation. But for Bajaj Auto, on a YY basis, if we see, then there could be a jump of 29%. Interesting to note that this time, TVS Motor sales is not expected to be that great, because we are expecting a decline of 23% on a YY basis. So this could be an exception, and we will be watching out for that. But lastly, from Eicher Motors Royal Enfield, a jump of 12% is what we are expecting. And lastly, from the tractor sales, like we highlighted, that a double-digit sales decline is expected. So we will be focusing on that. For M&M Tractor as well as the Scots, we are expecting a 21% decline on a month-on-month basis. So these are the expectations from the December auto sales data. Back to you.
Thanks so much, Shrishti, for that. There might be tempered expectation, but the auto index is sitting at record high level, one of the best performing sectors of the day, over 1% gain. But Anshul, this year, Tata Motors has doubled. Bajaj Auto up 85%, TVS Motors up 85%. What would be a recommendation to investors? Hold on, book profits, churn? What are you doing?
It would be prudent to take some monies off the table for sure, but I don't think that this is a flash in the pan. Clearly, when this cycle starts, and we're only at the beginning of a revival in the tier 2, tier 3 cities demand patterns, When this cycle starts, it has legs. And so this cycle has only just started in the last 1 year. And one can expect this to go on for the next 3 to 4 years. Given that much of the gains have been front-ended, as I said, prudency sort of calls that one should take some monies off the table. But a large part of your holdings one should continue to hold for the long term and for the cycle to play out. As Srishti was mentioning, and I agree with that, I think that the bus cycle looks the most interesting at this time. What has happened really is that many of the bus companies, as also the commercial vehicle companies, they added to capacities around the time 2018 and 19. And then we got hit by COVID, which continued for the next 2-3 years. So their capacity utilization in a broad range is somewhere in the region of 40 to 60%, which means that they have no need to add capacities now that the cycle has turned. And when volumes come in, the operating leverage that many of these companies will see will be so substantial that those are not built into models at the moment. So the bus cycle really is at a tipping point, and say over the next 2-3 years, one could see significant upside in returns as also in margins that these companies make. That seems the most lucrative. Commercial vehicles as well, that looks interesting. Passenger vehicles for the near term, I would be tepid. Two-wheelers, again, positive. That's the broad view on the auto sector.
Right. Anshul, it's interesting that you appear more tilted in favor of commercial vehicle, particularly buses, because just today there is a news report indicating that Delhi alone is aiming at replacing a fleet of diesel buses of 8 lakh buses which are plying on the road right now in phases, of course, which opens up a very large opportunity size, and bulk of them, I'm assuming, would go to legacy players, entrenched players like Leyland and Tata Motors and the bigger ones. So that's something to watch out for. But I want to talk to you about a stock which has done phenomenally well in 2023 and is the big daddy in aviation space, Indigo. What is happening is that one is getting a sense that the recent communication of the management appears to show that now they have big global ambition. They've been opening up newer routes globally and wants to really capture the outbound and inbound travel in the overseas side as well, and want to position themselves as a global airline rather than Indian. And right now it's for 10-11 time on current profits of 8,000 crore, about just over 1 lakh crore. So do you find comfort in that, in the valuation of Indigo, or you would book profits after its run up?
I'll give you an anecdote, Ajay. I think that in their food and beverages segment, this company makes somewhere in the region of 500 crores profits. And that is by a margin higher than the largest QSR company in the country, the profits of that company. So just on account of this business, the money that they make, and this is more recurring income, this doesn't fluctuate with the vagaries of the sector. They are really the largest QSR company in the country in terms of profits. And then if you move away from this, you look at some of the other businesses and their positioning in the markets. They're very well positioned. The market is definitely, it already has consolidated and it is consolidating further. For the services and the resources that this company has, clearly it stands head and shoulders ahead of many of the competitors. So the position of this company is likely to only strengthen going forward. We have seen what is happening in the Indian aviation sector and the airports that are coming up and the thrust towards aviation within the country. Clearly, this company will be the biggest beneficiary of that thrust, given its position today. So if someone doesn't worry about volatility in the short term and has a long-term view on this on the aviation sector in the country, then I don't see any other company that one can look at to invest in other than this business. And taking a 4-5 year view is probably a better option here.
In fact, I'm glad you brought up the food and beverage part of their story as well, because everybody, cribs about why do they sell a 50 rupees samosa for 500 bucks in the airline, or maybe a 40-50 rupee chai for 300 bucks. It's not about the chai and samosa. You know what is it about? Anisha, it is about they're serving it to you 25,000 feet in the air. Look at the environment is being serviced.
Fair.
So that is why perhaps the prices, and of course it's flowing in the profitability and shareholders benefit anyways.
But
Like
let's
that
see, as
one.
a consumer, it's always a pain to pay that
Yes.
money, right? But nonetheless, I take your point, of course. But before I let you go, Anshul, I wanted your take regarding the stock of BSE as well, the Bombay Stock Exchange stock. It's almost what, triple this year? It's one of those large, wealth generators this year. What do you think about this entire, market infrastructure, equity market infrastructure stocks? And if at all you had to take a bet for the next year, what would it be?
Anisha, while I wouldn't want to talk about a particular stock, but since you've asked me, let me give you my opinion on this particular name. This name has a peculiar business model whereby they charge a fees on the market cap, a listing fees on the market cap of small and mid cap companies, and many small and mid cap companies are listed exclusively on this exchange. They are not listed elsewhere. So when there is a small and mid cap rally and you see that market caps of small and mid caps go up materially, suddenly the earnings of this company, earnings inflate because they are charging a percentage of the market cap. And of course, in recent times, there has also been that excitement around F&O and the way this company has garnered some market share within the F&O segment. Given how the stock has performed, and given how the stocks in general in this space have performed, again, it would not be imprudent to take some monies off the table. It never hurts to take some profits out of the markets. And I must also mention that I have no interest. This is only for academic purposes, for analysis purposes that I'm mentioning. I have no interest in this space or in this stock in particular. And given that, while for the long term this space looks quite attractive, if India is to become a 6 trillion market, clearly stocks from this space will be big beneficiaries. But in the short term, given so much returns having been made in this space, as I said, it's not imprudent to take some monies off the table.
Okay, point taken. Anshul, on that note, we'll let you go. Thanks so much for making time and speaking with us. Quick look at the market before we head into that short break. 21,750. So the market seems to be coming back a bit, not by a whole lot, but at least in the last few minutes, there has been a definite traction actually from the lowest point of the day, because when we started off the show, we were below 20,000, 21,700. Since then, we have gained further ground. And let's quickly take a look at which are the biggest contributors right now. Tata Motors, of course. HDFC Bank is actually perking up. You also have other names like HUL and Bajaj Finance doing okay. Time now for that quick break. We'll come back with more.
All right, let's take the discussion forward with Pawan Parekh of Renaissance Capital, Fund Manager and Director. Pawan, afternoon. Thank you so much for your time. Pawan, let's start our chat with the point which Uday Kotak has mentioned about and touched about in his blog post today. In the banking sector, it appears that there is a fight for deposit. In fact, not only Mr. Kotak, but other banks have also, in fact, in the face of potential rate cut cycle by mid or next year, here deposit rates are being hiked, FD rates, etc. So on the one hand, fight for deposits. On the other hand, if rates actually turn by mid next year, would it lead to a mid-term turbulence on NIMs for some of these large banks? Is that a risk?
So that is very clearly a risk. And I think there has been a long period where banks have actually underperformed for not only these reasons, but also for other reasons. So in my personal opinion, the potential contraction in NIMs is already factored into the stock price from here on.
Already factored in, that's good news. Let's move on then. The other point in the NBFC space. Yesterday, the trends report by RBI, the banking trends report by RBI, seem to be nudging NBFCs to diversify their borrowing mix, in fact, reducing their dependence on banks. This comes right after, a month back, there was a kind of a bit of a, rap on the knuckles for some NBFCs are going overboard in speed of lending in consumer unsecured part. Do you think proactively NBFC would go ahead, perhaps go overseas, NCD routes, all of that, and what impact would it have on their borrowing cost?
So before we discuss this, I think it's very important to understand that here is a RBI governor, which is, I think, far more proactive than ever before, right? So if you see over the last 1 year at different points in time, he sounded cautionary in many terms, be it unsecured lending, be it increasing weightages, be it many other things. So I think all of this should be looked upon with the perspective that we are trying to avert a crisis before it comes, right? Having said that, I must also say that the entire financial system tends to obey the RBI in most diligent manner ever, right? So I would actually not be surprised if NBFCs try to diversify their borrowing sources, right? And I think from an NBFC perspective also, when they actually diversify and try to tap into new sources of funds, initially it could be some challenge for some of the NBFCs, but eventually it will be for the larger good, because essentially what would happen is that after all the initial hard work, these NBFCs would have developed multiple sources of funding, which will help in the long run.
In fact, all of these points regarding the war for deposits, what SBI did in terms of increasing its its term rates, as well as the fact the nudge coming in for NBFCs is all that we discussed with Mr. KK Misri. So I would urge the viewers to probably go to our social media handles and try and listen into that conversation. You wouldn't want to miss that one. But separately, what Mr. Misri also talked about was Poonawalla Group as well, because of course he's taken a role of strategic advisor to the group, and he said that he's positively surprised by the kind of asset quality that he's seen in the books of that company. If we can, let's play a bite of that conversation. But in the meantime, let me actually go across to Kunal to get a sense about a couple of these stocks which are buzzing around from the telecom sector. Vodafone Idea, I think it's upwards over 20% right now, and Indus Towers, which is up 7%.
Yeah, I think both of these stocks, they move in tandem, but Vodafone Idea is an interesting case because after I think 4 months of consolidation, September, October, November, and I think first half of December, the stock seems to have come out of a breakout. So this resistance of 15 and a half of Vodafone Idea has finally been taken out, and this could actually be a big turn-off event for the stock price, because such kind of move should ideally have a spillover into the next calendar year as well as over the next month. And I would believe that there could be a stronger bit of short covering as well, which could be at play for the stock, because till yesterday the stock over the last couple of months was actually going through a drag. I think from 15 and a half odd levels it had come back towards 13.2 if I'm not wrong. So I think from there, with such kind of a strong up move, it's been led by short covering, and that generally has more follow through for stock prices. So wouldn't be surprised if the stock actually comes back towards maybe 17 to 17 and a half, say over the next couple of trading sessions.
Okay, point taken. So that was about a couple of these telecom companies, but I think we do have that bite from Mr. Mystery wherein he was talking about the Poonawalla Group. Listen into what he had to tell us.
I think, I was very pleasantly surprised when I first went and saw the balance sheet. I think their ability to grow is phenomenal. Their margins are huge. They run with very good margins. Their NPLs are very low. They have a very, very effective system of being able to deliver loans very, very quickly. So I've been very impressed with what I saw with the company. Now, having said that, talking of the NBFC sector as a whole, I think NBFCs play a very important role in the financial system in India. There are certain categories of loans, certain locations, certain types of credit, which banks will always find it very difficult to do. And NBFCs specialize in those kind of loans. So NBFCs have a very, in my opinion, an extremely important role to play, a very niche role to play, and they can play that role in specific sectors and specific products where they would develop a lot of expertise. So I think NBFCs in India have a huge future, as good a future as the banking system is. And you must remember that the lending rates of these NBFCs will be a little higher, typically because of the fact that one is their cost of fund is higher, but more importantly, they are lending to segments of the market where banks would not be able to reach out to or would not be willing to pay.
In fact, Poonawalla FinCorp has gone through a bit of a corrective phase and come back to levels last seen 6 months back. Pull up the last 1 year chart. This is exactly the phase from which the stock corrected almost half to 220 odd from 450 odd and then has recovered. So now the new territory actually begins. So watch out for that particular stock now that Mr. Mistry is the strategic advisor. But Bhavan, I wanted to speak to you about the pipe industries. Today, DAM Capital has come out with a note on metal pipe industry saying that domestically Jal Se Nal and overseas oil and gas capex, these two twin engines will actually boost top line and profitability of many of these companies. And we have seen, of course, Venus Pipe and Ratnamani is what DAM Capital is most bullish on, but it's just not that. Look at how Surya Roshni is surging toward 20% today. Not many know they have a big pipe business. Then Man Industries up 8%. We spoke to the management. We'll get you some bites as well from there. Overall, the pipe industry, the metal pipe industry is buzzing on these figures. Do you think these are structural and it could be meaningful for half a dozen of companies which are listed here?
Yeah, I definitely concur with that view. And honestly, before we come to pipes, I must also tell you, over the last 2, 3, 4 years, the government has taken all its program very seriously, be it power, renewables, be it pipes, or be it railways, or be it defense. So all these government programs are very serious now. These are not just big numbers for analysts to just write in their report. These are things which are happening on the ground. And having said that, I must tell you, these companies have had a phenomenal last 2, 3 years, both in terms of earnings and stock price. So I definitely concur with that view that, in terms of growth outlook, these companies, the sector looks very promising. The only thing where I am a little circumspect is in terms of valuations. I think all of these companies in terms of valuations are no longer very reasonable given the rally that they've had. We might be interested in some of these names if in case we see a reasonably good correction.
Point taken. Actually, I wanted to also touch upon what's happening with HUL because it seems like to improve the profitability, the company has actually cut down the margins of its certain distributors, etc. Let me bring my colleague Asta on board to give us a bit of a backdrop on the story and what's the latest brewing on that one. Asta, what exactly are now these dealers talking about?
Yes, well, Hindustan Unilever has changed the margin structure for its distributor. Now, for the information, I should tell you that there are two types of margin structure. One is the basis margin and another is the variable margin. The basis margin is the fixed margin and the variable margin depends on the performance. Now, HUL has cut the fixed margin to 3.3% from 3.9% and they have increased the variable margin to 130 points from 100 points. Also, there was a meeting of HUL distributors early in the morning and they have opposed this decision and they are not happy with the decision as already they have faced losses during and after the festive season because there was a glut of inventory with the distributors as well as the retailers and the wholesalers. That's why they are already facing losses since months and now they were not happy with the decision. Also, the All India Consumer Products Distribution has threatened to block the HUL goods because they say that this decision might jeopardize the entire distribution networking system. And the distributors also suggested that the company should reconsider their decision and also give them 5% basis margin, that is the fixed margin. They want 5% fixed margin along with the additional incentives. Also, ET now wrote to Hindustan Unilever, but there was no reply back we got from the company. So this was the decision, and the distributors also said that they might stop purchasing the goods from the Hindustan Unilever if the situation is not under control till January 1st.
Okay, point taken. Pawan, FMCG was one of those underperformers of the year gone by, right? Do you think things are likely to change in 2024? Because while urban consumption was going rara, it was the rural end of the economy that did not bounce back, and now the initial signs of it. Your take?
I think consumer, I've been mentioning it for last 6 months, is a pretty tricky space to own because when you actually look at the bigger consumption basket, apart from staples, if you also add the discretionary side, you would see that jewelry, travel are doing well. But on the other hand, staples, consumer durables, and apparels, footwear, a lot of other subsectors aren't doing so very well. My understanding from the ground is two things. One, over the last 1 year or 6 months or so, there has been some slowness as far as I mean, RBI has been very vocal about unsecured loan. Even the NBFCs are now trying to be a little cautious, and obviously retail I mean, personal loans, the personal leverage is already very high. Right, and at the other hand, a lot of these cash flows are getting diverted into home purchases and jewelry, which are large ticket purchases. So in the mix of all this, I would want to believe that some of the sectors which haven't done well over the last 6 months or so, primarily the stable space, will continue to struggle actually, because there is no reason for a big bounce back into these sectors. And if you add to that, despite these stocks haven't not doing so very well over the last 2 years, so valuations are still not very comfortable as far as we are concerned. And that is the reason, I mean, actually is the point that we discussed in last 2-3 minutes or so. But we are witnessing this trend across the entire staple space, wherein companies are trying to, be a little aggressive with the channel and trying to drive more volume growth so that it can support their earnings or so. So overall environment on the ground isn't looking so very rosy, and we would actually try to stay away from these stocks because both from earnings perspective and valuations, we aren't so very comfortable out here.
Okay, point taken. So, not still convinced on the FMCG story, but Nuresh, I wanted to speak with you about some price volume buzzers. Tata Motors, the biggest single weekly gain that we have seen in 48 weeks, advancing for third consecutive session, has hit a record high on an intraday basis. IEX, one of the picks that I think Kunal had, it's showing a breakout from the pivot highs. 52-week high today, volume at 6 times the 10-day average. And then Tata Consumers market capitalization has crossed 1 lakh crore rupees. Fifth Tata company to enter the 1 lakh crore mark, has been advancing for 8th consecutive session and has hit a record high on an intraday basis, trading above all key moving averages. Tata Motors, Tata Consumers, IEX, what's the view, Nuresh?
So Tata Motors, the view is positive. It's just that the risk reward is not great after the move. Gave a fresh breakout into new all-time highs above 735 and made a move towards 790. So could see some bit of a pause, but the trend still remains positive, and this is also a new all-time high for the stock. The next one, IEX, is more interesting because the stock has gone through a 1 year period of sideways consolidation. Multiple times it would top out around this 165 mark and again go back to 130 levels or lower. This time around it has sustained above 165. Tried to make that attempt in December start also. Had corrected back to 140 and now finally above 165. Indicates that the trend is changing, and if this continues, it could surprise on the way up towards closer to 180 to 200 levels. So IEX looks a buy at current levels. Tata Consumer, again, same problem like Tata Motors. The stock has moved up from 960 to 1050, 1100 in the last few, say, 6-8 sessions. So the risk reward is not great. And given that it's a FMCG stock, time to book some profits. They do not have a tendency to go up massively in extreme short periods of time.
Okay, thanks for that take on Tata Consumers, Tata Motors as well as IEX. But Pawan, if I had to ask you about the top bet for 2024, if you can pull up a stock or a big theme, what comes to mind?
I think banks have been a big underperformers. There have been a lot of cautionary statements from RBI. I would want to believe that India's got a very strong, banks have got a very strong underwriting skills. Consumers have become very cognizant of their credit scores. So growth will continue, and we are unlikely to see any major issues as far as NPAs are concerned. These stocks haven't done anything in the last 2 years or so. So banks is definitely one space which I think should recover, bounce back in the next calendar year. Apart from that, I think, CapEx cycle recovery is a theme which is very strong out here. So industrials, infrastructure is another theme which we think should continue to do well. And when I say that, I also include a lot of these allied spaces like power ancillary, defense kind of stocks. So if you were to ask me top 2 names, I think these are the 2 key sectors which I feel there's a reasonable good comfort both in terms of growth, earnings growth, and valuations.
Enough, banks and capex theme, those are your top recommendations, but we've been asking all our experts as to what their 2024 picks are, and let's pull up some of those on the screen. I think names like Federal Bank, DCB Bank, they should come up on the screen. So for Sanjeev Bhasin, it was SW Solar and DCB Bank as the top bets. Sandeep Sabharwal was quite positive on Voltas and Wonderla, and Voltas has another favorite, perhaps is one of the favorites of Kunal. He likes Voltas as well as L&T Finance, whereas Naresh believes ONGC could be the top pick for 2024. So those are some of the recommendations for you coming in. But it's the last 7 minutes of the trading session for the day, for the month, for the quarter, for the year, for the half year. There's just so many, instances coming together. But it's been a year which will be remembered in the positive, light, because it's the 8th year on the trot that we have seen that Nifty has actually managed to gain. But Kunal, what's the historic analysis been? Do you think after 8 years of gains, it's going to be a year of perhaps a bit of a retracement, or there is no such historical marker to track?
So I was actually looking at, it's a good point which you made, Anisha, because I was actually looking at the yearly indicators, and that's a classical way to try and look at that even after 8 consecutive years, and especially for those indicators which on closing basis calculate the upward trend in the move for the indices. They are not entered into an extreme overbought territory even after such kind of a move for the indices, because for example, the previous year it was very slow gradual up move for the indices, except for the intra year volatility. Even this year so far we have had 2 bouts of sharp periods of volatility, first in the first couple of months of 2023 and then the mid part of 2023. So I think except for those 2 bouts, we've seen a 80-90% rise on the Nifty, but then on closing basis, on the yearly closing basis, we are not yet into an overbought territory. So I think that's going to be a positive sign for the index, that because even after such kind of a steep 7-8 year uptrend for the indices, we are not yet into an overbought territory, which means for the start of the next year at least, there should be a positive momentum.
Okay, so nothing to worry about in that sense. Nothing on the charts or historic trends that would warrant a lot of caution at this point of time. But let's take the BTSC trades, and these BTSC trades are going to be special because you'll be starting off the new year with that portfolio. So be very careful about that. Naresh, what are you picking up as a BTSC trade?
So first is the buy on Crompton Consumer. We are seeing a recovery in a lot of consumer durable names. This has again given a short-term breakout, stop loss at 308, target price of 320. Second is a buy on UBL, which has given a new 52-week high breakout, stop loss at 1760, target price of 1820.
What about you, Kunal? What's the BTSC idea?
So I'll go with Tata Chemical as a buy, targets of 1180 on Tata Chemical, stop loss at 1070, expecting a strong breakout on the upside. And second will be a buy on IRCTC. Somehow the last 4 or 5 days, the stock has been a lot more sideways, but I think it's a very good chart in the making. Potential breakout about 900 should take the stock higher to 980, stop loss 840.
Okay, so those are the top recommendations as a BTSC trade that our chartists have for us. But Pawan, you track the sugar sector actively because there has been a lot of flip-flop. Of course, a lot of people have made quite a bit of money this year as well with the kind of turnaround and the ethanol story. If you track this and the other, agro sector, cotton, textile for that matter?
Not so very in great depth, honestly. These are kind of cyclical sectors. I must tell you, specifically to sugar, the space looks interesting because ever since government has started using ethanol as a balancing factor for sugar earnings, the sector's cash flow, earnings, visibility in terms of growth, in terms of cash flows have become very high. And that is the reason you would have seen some of these stocks doing well. I would want to believe that if these things continue, there's a reason to believe that, valuation can even improve from here on.
Okay, point taken. Valuation can improve, and that's an important bit coming in. But Naresh, as we wrap up the day, I want to end with your view on the auto stocks and which are the favorites that you have from that space.
So auto names, majority of them have really done well. So tough to take a buy here. The only one which has not done well is Ashok Leyland. That is one which is trying to make a breakout move today. So that could be interesting. Hero MotoCorp continues to remain interesting, but the stock has moved up from 3,200 to almost 4,200. So the risk reward is not great in any of the auto names as such as of now. But Maruti is another one which I like, which has given a breakout and is on a retest. So at current levels, Maruti and Ashok Leyland look interesting.
Maruti and Ashok Leyland, those are the top recommendations coming in. Let's see what these companies deliver with respect to the December sales number. But on that note, all our guests, we'll let you go. Thanks so much for joining us, not just today, all through the year as well. And here's wishing all of, but we are not done with the trading session.